Hi guys, I think we're live. Let me know if you can hear me and see my screen in the chat. Hope everyone's had a good weekend and a fun trading session today, given what's on my screen. Yeah, hope everyone's alright. He has nothing to sell, everything he has in an NFT. Yes, so much easier to not worry about the market, Aaron, when you just bought JPEGs at the top and went all in, as I always do, obviously. So, I've been having a great time. No, I think the way to think about NFTs is almost like sort of angel investment type of things, where or far out the money call options, where you spend a little bit, maybe buy one rare or mint it, do whatever, and then you either swing for the fences for like a 10x, 50x, 100x, this NFT becomes a cultural icon, yada yada, or you let it go to zero. I think trying to day trade or, even swing trade NFTs to some extent is a bit silly because they haven't been financialized sufficiently to warrant that type of positioning. So it's best to treat them as kind of lottery tickets more than anything, So I think that's a decent framework for JPEGs, especially because market structure is so different, and there's no market sell button, and for a million reasons. We could even do a separate stream eventually on like NFT market structure. But I think fundamentally, because the asymmetry is so massive and so obvious, i.e., it either goes to zero or it becomes a really important piece and up a lot. You only need to trade with small position size and no management whatsoever. So yeah, let's talk about Bitcoin as this predatory intraday price action starts to unfold. So first things first, there isn't we'll kind of look at the quarterlies and monthlies. I don't have strong views on those timeframes generally. I don't use them a ton. But essentially, they tell the story of what we've been seeing over the last couple of months, which is we had the all-time high breakout, which hasn't led to continuation. And then if you treat this as a range, if you want to be really pessimistic about it, you spike this quarterly high, and you then go towards the quarterly lows. Now, again, that's the Doomer version, whatever, but purely from like a high time frame chart perspective, that's something to be aware of. Again, for me, this type of structure has less force because it's on the quarterly and because this is taking place at all-time highs, or near all-time highs, but still, something to bear in mind in terms of high time frames. The monthly has a bit more color to it. If we treat this as a monthly range, and using the highest close as our range high, lowest close as our range low, and then we can get a bit of a midpoint and extrapolate it, you can kind of see that stuff starts to line up really nicely around the 50k level if this breakout fails. So, if anyone else were to draw this range on any other time frame, you'd kind of look at this price action and say, oops, excuse me, range high, range low, attempted to break out from the range high, looks like it's not going to succeed. Again, kind of depends on the weekly and monthly close, but just for argument's sake, this ends up being a deviation, failed breakout, excess, whatever. When you get a range and the market tries to trade through one side and falls back within it, what do you do / what do you expect? You generally expect a move towards the range low, with the midpoint being your first trouble area. So in our case for Bitcoin, if these weekly and monthly candles aren't rescued, which we'll get onto in a moment, and this ends up being our breakout attempt, I think you've got a very confluent first trouble area at 47k, which is more or less 50k. And the reason I say more or less 50k is if the market starts to unwind and really puke, I still expect some support in the 50k area. But if if there's a lot of liquidations going on and it's just like a strong move, you generally have to give these high time frame levels kind of more space to work with. So, if you're dealing with like H1 levels in terms of precision, you might give it like 1 or 2%, right? And then if you're dealing with H4 levels, this is just me making up numbers, by the way, you might give it 2 to 3%. But generally speaking, when you're dealing with much higher time frames, you need to give it more space for wicks and whatnot. So basically, the precision of a level changes according to the time frame it's on. So if you're trading lower time frame levels, you kind of need price to stick to them more or less. But if you're trading higher time frame levels, there's more space for wicks, right? Lower time frames, generally less space for wicks if your trading is going to be accurate. Higher time frames, you need to, less precision. I suppose that's the simplest way of articulating it. Lower time frames, quote unquote, more precision. Higher time frames, slightly less precision, especially from like a knife catching point of view. So you see, if I say 47k here, that doesn't mean that I think 50k support is going to break. It's just, if it's going to be a fast move down, there's going to be a wick somewhere. Often in excess of whatever, 10, 15%. And I just think this little monthly cluster, if the market doesn't recover, is a decent spot to fish for those wicks. Okay? Again, contingent on this ending up as a failed breakout, which will be quite clear by the end of this week, and we'll have the monthly close at that point as well. Does that make sense so far? And the last thing I'll say just very quickly about the monthly chart, if this turns into a failed breakout and the market does trade and does all sorts of difficult nonsense at the mid-range or even the range low, as we know from a million other streams, one of the best performing setups in crypto, in my opinion, is when you've had a breakout attempt or a failed breakout, the market trades below it, and then eventually comes back to reclaim the original level, right? So this being your high probability long entry post failed breakout. So even if the market just continues to take a shit and trades to mid-range, range low, whatever, certainly if you get some support at 50, there's still a good high time frame long opportunity on the table because this will look like this, right? So even if you want to be super conservative and say, look, this is a failed breakout, maybe 50k is support, maybe it isn't, fuck that, I don't want to figure that out, I want to just take some chips off the table, get my tax money, whatever. Even if we have to suffer through a failed range high breakout, that's always, there's always light at the end of the tunnel because this failed or this range breakout, failed breakout reclaim, fucking hell, the failed breakout reclaim tends to be a really good long scenario. Okay. Yeah, let's see if I missed anything. Was plan B wrong? No, he'll just change his model and it'll be correct. Also, like the video if you enjoy this type of stuff. The Monday streams have been a tad more frequent than usual, so make sure to show us your love by clicking all sorts of relevant buttons. So yeah, that's the monthly time frame. Again, just something to bear in mind. And if we look at the weekly, that picture sort of starts to come to light. Now, one thing I don't like about the weekly, and there are a couple things, but one is that like this weekly close, the most recent one, your interpretation of it depends on which of these prior highs you choose as a level. And whenever there's that like high degree of ambiguity in the market, like did it close above support or below support? Well, it depends, right? If you're using this highest close, it's a bearish close. If you're using the first pullback from trend, this one, then it's a bullish close. If you're using this pre-breakdown consolidation, it's a bullish close. It just gets a bit, I don't like when such an important area has this much ambiguity to it on a closing basis. Now, two things on that. First of all, the level that I think is significant is actually the first kind of pullback structure from the uptrend, which is this high here. And on this time frame, the close was constructive, right? It closed above support. Now, what I will say is that if you want to get around the dilemma of figuring out which level has precedence, is it support, is it resistance, yada, yada, I think we can all look up a little bit and see that regardless of what you think of the prior range, we do have a more recent level or structure that's quite important. And it's a bit of a sneaky one. It's just this very basic consolidation here, right? Now, why is that important? Well, this was the cluster or mini range consolidation, whatever, that preceded the final push through all-time high and then got nuked, right? So this is the last little like weekly range before the range breakout into all-time high, which has now seemingly failed, right? So that pattern that we talked about, whereby you have a range high failed breakout and then resistance at the original, and then you long it when it gets reclaimed, here, we sort of have a version of that at 61k, whereby we had price come up, short consolidation, breakout, looks like a failed breakout, but now we know with that model that we drew here, if it gets back above the fake out level, which would be above 61k, you've got a high probability long at least towards the prior all-time high, and then we'll see if Bitcoin does Bitcoin things again, right? So the argument I'm making essentially is that if you are unhappy with the whatever constructive ambiguity that exists in defining wherever support is in this weekly range high. I agree with you, but I think there's a way to get around it by simply using a more recent structure in the form of this 61k cluster and using that for directional bias. i.e., maybe this is a bullish weekly close, maybe it isn't. There's a lot of ambiguity depending on how you draw your levels, but what's definitely not ambiguous would be trading back above the 61k cluster, and at that point you A, have proof that wherever price landed in here it found support, and B, you've got market structure reversals on lower time frames as well, as we'll get to in a moment. So that's kind of my take on the weekly chart. Does that make sense? Trade at XO and you have different range, it's fine, dude. People, we're all just squiggling on charts. Pick different levels, different highs and lows, different methods. It's completely fine. I don't think there's a right or wrong there. Okay, it makes sense. Good. So now, if we look at what that cluster looks like and simply draw it on the weekly time frame, if we look on the daily, you can actually see it's a very important market structure level. As in, if we take a look at very recent market structure, low, high, higher low, higher high, higher low, and then this is the move which broke market structure by making a lower low, right? And you can see that this weekly level is confluent with, surprise, surprise, this daily cluster and just this market structure level in general that was violated by this move lower. So that's a pretty good sign that this weekly cluster also has daily market structure confluence. What you could even do is simply box out this entire kind of pre-all-time high consolidation, like so, and make the argument that your bias will turn bullish if this market structure level gets reclaimed. Because again, similar to the weekly, low, high, higher low, higher high, and then ignoring this a little bit here, but the result is the same, lower low. So in terms of the low that's shifted market structure, the low of this consolidation pushed the market up. That's when you got your higher high that failed, and so now that's expected to be resistance. Right? So no matter how you slice it, either using the weekly cluster or using this daily market structure level or even using this daily cluster, you seem to land at a lot of confluence around 61k. Right? And I just think that's a good sort of medium-term line in the sand to have if you're going to be conservative. Does that make sense? Now again, bear in mind what I'm arguing right now is a pretty conservative take, because I could come in here and say, look guys, the only level that matters is the weekly range high here. Boom. We closed above it, that's bullish. Market is trading lower now, probably towards previous week's low, but because the close was positive, you're expecting a trap at previous week's low and then move back above the level, and your first trouble area is the cluster and then all-time high plus. I think that's not the worst argument in the world, right? I actually think it stands to reason. Like if you came to me after the stream and said, look, I know you argued for whatever, this consolidation and this area being unclear, but my view is that this is the range high, we closed above it, now we spike previous week's low and then moon, I'd say fair enough. I get that. I don't think that's unreasonable or entirely disagreeable. My version, especially because this is like a weekly stream, so I try to, format it such that it has some sort of staying power, so you can watch it the day after and just have it during the week. I'll generally be more geared towards presenting you with the boomer conservative version in the live streams. And the boomer conservative version is that on the weekly and the daily time frame, there's a nice little first trouble area, cluster, consolidation, resistance, rectangle thing at 61k. If you don't want to bet on guess the range high, then trading through 61k will kind of do that for you and give you additional market structure confirmation, so to speak. Okay, that's just a nuance I wanted to add there as well. I don't have much else to add on other time frames, really. I think I wouldn't disagree with you if you drew this structure as a daily cluster and said that the market is at intraday support here. I think that's a totally acceptable conclusion, but it's just not the type of area where I personally want to be moving around spot stacks of BTC or whatever else. But from a shorter time frame, shorter term trading perspective, I think this structure is valid. Just bear in mind, we are coming pretty close to previous week's low. So if there's anywhere to, if you subscribe to that daily support argument, there's still a world in which you let it trade through previous week's low and then fish for wicks, liquidations, what be it. I personally don't like buying lower time frame structure so close to higher time frame value areas like previous week's low. But this is getting into like short-term trading habits and so on and so forth. Aaron says, what's the bearish scenario, Cred? The bearish scenario is that the weekly breakout retest has failed and the market is going to go from 60-ish to 50-ish. That's the bearish scenario. That wouldn't even be super bearish from like a market structure perspective, but purely from like a percentage decline going from 60 to 50. I mean, that's 30% more or less, right? Your bull market quote unquote correction. Where is next support? Good question. The level that I really like, a lot of people have drawn this daily structure here. Now, again, I'm assuming where is next support if the market accelerates, yada, yada, because as I pointed out, you wouldn't be wrong if you were to argue that we're at the daily range low now. I find that reasonable. It's just, again, I'm not buying it short term because there's a previous week's low there and I just don't have a high time frame bias. But if you mean like if this type of price action continues, whereas the real high time frame support, in my opinion, like there's some arguments being made that this former range low turned range high type of thing is a good inflection point for the market. So previous range low here, bit of a range high, reclaim, went up. I don't like it that much, to be completely honest with you. I'm just not a fan. The structure that I really like is this entire pre-52k breakout cluster / consolidation. This type of thing around 48 to whatever, 47 to 49k, right? And the pattern there is pretty simple. You had a consolidation, breakout, which failed, resistance, and then eventually got reclaimed with no retest on the way up. And so that would make quite a nice support, given how quickly it moved away from it with no type of wick back or anything. And also, if we just re-add our monthly range for a moment, like so, and then pop down to the daily time frame, you can see that that cluster is aligned with our higher time frames as well. This is the monthly, and then this is the cluster itself. So there's like a lot going on here. Not to mention anyone with, stops below 50k, and people trade like that. I know it sounds insane, but they'll read on Twitter that the market is bearish below 50k, and they'll set a stop at 49999 or whatever, which is not the best way to do it. But, in many cases, you've seen the market probe above and probe below round numbers before reversing, and I don't see why this would be any different. So sort of poking below 50k into a high time frame region of support before bouncing or doing whatever. So yeah, if just to answer the question again, if this is, this is the top, and then we retest this monthly level and go down, where is support? For me, it's around, what is this, 47 to 49k-ish, with a very open mind to having wicks lower, especially if it's a kind of move, the kind of move that flushes leverage. I don't think I've got much else to add. So if we just do a quick summary, on the monthly time frame, highest close resistance, lowest close support, mid-range landing at around 47k. At the end of this week, we'll know what the high time frame picture looks like. The bullish case, quite obviously, is a close through more or less 60k. At that point, this will just look like a wick. Like, think about this candle now, and if the month closes above, whatever, the range high, 59k, 60k, whatever. Like, this price action we're seeing now would turn into, basically, hold on, let me try to draw this. It would look looks... I mean, it would look kind of ugly because of the long wick anyway, from the high. But in any case, if you get a close above the range high, what we're seeing right now would just be the wick retest of support before something like... Let me change the color. I don't know. Let's say something like this. Right? That still looks ugly. Let's say it pushes up into the monthly close. Let's give it the benefit of the doubt. Okay, there you go. There you go. So in the most bullish case, it's not the weekly that has to get rescued, although they're kind of aligned because the monthly closes in 8 days. But anyway, the monthly and weekly get rescued. This current shit price action is just a wick portion. We end up closing above, and we all panicked for nothing, and it's a full send. Okay? But anything which doesn't look like that will result in a monthly and weekly failed breakout, right? Whereby you had the previous range high, all-time high, whatever, market poked above it, closed below it. On any time frame, any chart, whenever you get that type of stuff, a real effort to break from balance and falling back within, your targets are the mid-range and the range low, with this being your invalidation, and the original level of resistance being back in play. So if the weekly and monthly doesn't get rescued, which would look like a close through 61k if you're being really conservative, but 60k is fine as well. Depends on the time frames and the clusters you want to use and so on and so forth. Anything which doesn't look like a full-on rescue reversal into the weekly and monthly close will probably trade towards 50k, which for me means around... Well, honestly, I'd expect the mid-range level to get tapped. Let's say 47k, but 50k generally is an area where the real high time frame supports start to align. And then whatever it chooses to do at mid-range, range low, whatever, one of the better setups that will emerge from it, if you're not happy buying risk or buying dips, whatever, is the subsequent range high reclaim whenever that may be. Okay? So let's just do this. Summary. Monthly plus weekly aligning. Rescue needs at least 59k plus, ideally 61 W, fuck's sake, W cluster, if conservative. Okay. Monthly plus weekly aligning. Rescue needs at least 59k plus, ideally 61k weekly cluster, if conservative. Weekly cluster resistance at 61k. High time frame support stuff if Doom aligns around 50k, but wicks below very likely. Well, okay. I'm looking to buy nuke if super discounted. Long wicks below high time frame structure. Long wicks plus licks. Or high time frame reclaim and hope it's not shit. Okay. There's the summary for for BTC, okay? Then we'll move on to ETH momentarily. What's the summary? Monthly and weekly timeframes aligning as far as breakout structure goes. In order to get rescued, it needs at least 59k, which is the monthly range high. Ideally 61 plus, which is the weekly cluster and daily market structure shift level if you're conservative. That stuff, as I mentioned, aligns at 61k. The high time frame support, if everything dooms, is around 50k. But if it gives us the type of big open interest wipe that a lot of us have been waiting for, wicks below that round number are likely, and then it's a matter of how discounted to 50k can you get. And that always depends on how the market looks coming into it, yada yada. But expecting wicks below it is totally reasonable. So for me, I think buying Nuke if super discounted makes sense, which would mean, as mentioned, the long wicks and licks below high time frame structure, which starts at around 50k, or the high time frame reclaim that we talked about, the 60k plus or 61k plus, with the hope that it's not shit. Because as we know, de facto breakout buying Bitcoin around its all-time high has been a disastrous trade. So hopefully whenever that comes around again, or close to it, like in the 61k example, it won't be as bad. Does that make sense? Is this helpful? Like the video if it's helpful. Give us some feedback. Always love to read your comments and everything. Okay, good summary. Thank you, Ben. Cool. That's my take, at least. Yes, I just sold everything. You shouldn't do that. Okay, let's talk about ETH. I think we'll start with the weekly. A couple levels that matter. The first is the range high. Triple top, range high, massive level from about 4k. It sort of got retested and bounced, but for me, this isn't like a real retest. I know that sounds really bad and maybe selfish, but these high time frame levels tend to get wicked a lot harder than this. So I would not be surprised by a move below previous week's low that probes this range high in a more meaningful manner than it has been already, but I don't have strong views on this. The only other level that's particularly important or nearby is this 3k consolidation. Let me get rid of the arrow. This consolidation in the mid 3000s here. But being completely frank, I think if you've got resistance, and if this follows BTC and turns into a failed breakout, the likelihood of this holding is not very high, in my opinion, at least not in the medium term. And then a market structure break on the weekly is likely, yada yada. So long story short, I think if Bitcoin continues to shit, ETH won't decouple from it in any meaningful sense, and the technicals would start to look really grim on a close below the weekly range high. And at that point, I think you're more or less gunning for this low with some intermediate support at 3.3k. That's it, to be completely honest. Anytime I just start reading too much of Bitcoin doesn't matter anymore, Bitcoin isn't the crypto market, decoupling, dispersion, etc., I just have not seen enough evidence that the market has changed or matured such that we can now have independent sectors in a far less correlated manner, especially to the downside. Like to the upside, sure, you have massive outperformance, and Bitcoin is usually boomer coin, or has been at least in the last year and a half in that regard. But I just don't think there's enough high time frame evidence for secular trends and a meaningful decoupling between Bitcoin and ETH, or ETH, altcoins and Bitcoin, or any of that type of stuff. I think if the big boy is going to shit, which is Bitcoin going down a lot, very few things are safe, because at the end of the day, they're just collateral for a much bigger Bitcoin spot position. So I'm not making the argument that, yeah, Bitcoin looks weak, but ETH is above support, therefore crypto market go up. I haven't seen enough evidence of that. Now, it's true that Bitcoin can top, right? It can put in a top and consolidate, and altcoins can go absolutely ballistic, as they did in April, May. That's a totally fine argument. You can still make a lot of money in crypto when Bitcoin is topped, as long as it's not nuking. If it just tops and starts going sideways, there's plenty of time, and if anything, it's one of the better times to be long ETH, L1s, shitcoins, whatever. It's awesome. But if Bitcoin accelerates, then I think very few things are safe. And I'm definitely not willing to make the argument that, yeah, Bitcoin looks bad, but ETH looks better, and it's just going to bring everything up. I'm not there yet. I don't think we've seen enough evidence of that. So yeah, long story short, let's do a summary one for ETH as well. Decoupling, not compelling yet. If BTC accelerates down What the... Okay. ETH likely to follow. ETH alts can still do well if BTC has topped, so long as it, BTC, consolidates is low volatility. Okay. Technicals just kinda looks shit if 4K fails high time frame. 4K reclaim would be cool. FTA low mid 3K, but it's a bit meh because it's so close to 4K itself. Does this make sense? So ETH summary, decoupling and not compelling yet, so I don't really give a lot of weight to the fact that it's weekly looks better than Bitcoin's. I don't think we're at a market where that's just going to drag everything up. I do think if Bitcoin accelerates down, ETH is very likely to follow, as we've seen in the past. A good case scenario for your altcoins is if, yes, Bitcoin's put in a top on the weekly, monthly, whatever, but it doesn't accelerate and just kind of chops and gives you that period of time. Even if it's going to accelerate eventually, that period of time where it's put in the top but it's not volatile yet is really good for ETH and altcoins. Like last time around, ETH basically put in this entire leg here from what? Let's say 1.6K to 4K, so more or less more than doubled. Depends where you count from, but let's say ETH doubled after Bitcoin had topped. So that's where this point comes from, that non-Bitcoin stuff can still do well if Bitcoin is topped, so long as it consolidates and is low volatility. And also at that point, it just turns into musical chairs, like Bitcoin's topped, all of my shitcoins are flying, but at some point Bitcoin is likely to accelerate. Timing that is pretty tricky, but still that environment is one worth being aware of. Technical stuff, 4K is our weekly range high, previous triple top, yada yada, huge technical level. If it fails, high time frame charts look rough. There's some support at low to mid 3K, but not like a mega level by any means, especially given how close it is to 4K. Just like Bitcoin, if we get a kind of fantastic range high failure, this type of thing, 1, 2, 3, breakout, and then it comes back. Whatever happens afterwards, if it gets back above 4K, that'll be a really good long towards, 8K, 10K, 1 zillion, okay? Just worth bearing in mind. So this is the summary for ETH. Does that make sense? Is it helpful? I'm going to leave it up for, here you go. And yeah, like the video if you've learned anything so far. Let's get to 200 to stroke my ego. And support the channel, obviously. Also, the best case of this stream is I do all this doomer stuff, like, oh, weekly, 61K, reclaim, yada yada, and the market just moons. That would be cool. I'd quite like that. So let's hope that outlook bottoms the market. If I had to start pulling levels out of my ass, I think we're at a daily range low here on BTC. Daily range low coming up to previous week's low. Okay? So maybe the market gods are generous enough to bottom on this FUD and give us a push below previous week's low that gets bought up, closes above the daily range low, and then starts to push up from there. That would be super cool. Just so that's on your radar. Maybe we can will it into existence. But just some context is for shorter term viewers, where are we now? This is the daily range low, and pretty close to previous week's low as well. So, yeah. Yeah, that's Bitcoin, ETH, Sol. Actually, let's do Avax first. This thing has just gone up in a straight line. I think the trade is rather straightforward. Either you are trading like very aggressive daily continuation patterns, and I literally mean stuff like buying every single cluster on the chart, retest, and hasn't retested yet. So either you're already in a position trend following, or if you are trend following, it's on these intraday wicks on pretty low time frames. right? You can kind of see what that looks like on the intraday. But in terms of higher time frame stuff, if you don't have that type of trend following system that lets you buy super shallow pullbacks like this into questionable daily levels, in the absence of that, let's say you look at the weekly, you need to either wait for it to puke into high time frame levels as a result of a market correlation, or to establish some sort of higher time frame range and then trade that as your structure. So for Avax, again, absent your trend following tools, you basically have to wait for it to puke into this weekly cluster below what, 60 and 70, or do something like, you know, just start to consolidate here and then maybe give you a failed breakdown on the weekly that gets reclaimed, and then you have to trade that on the weekly time frame. So your options: low time frame, trend follow. I'm not very good at this. 2, high time frame, nuke. When the whole market shits, you just remember that, hey, this is a good coin, I want to buy it. Or 3, wait for high time frame continuation structure. That's simple. Low time frame trend following, like we discussed, the shallow pullbacks on the daily time frame that aren't even visible on the weekly. You wait for the high time frame nuke and hope that Avax correlates to the downside. You can catch some wicks, liquidations, whatever. Or you wait for the higher time frames to give you something technical, not just green candles, and trade that. An example would be this failed range breakout into a range high breakout type of thing. Does that make sense? I hope it makes sense. For Solana, it's more or less the same. I quite simply think that there are... Well, there's really one level that matters, and it's the weekly pre-breakout range. Which is... You can define it in several ways, but if we take some liberties, it's basically this consolidation. And really basic TA. Market went up, sideways up. The range is now support, with the key levels being the range high and the range low. This is nearer to market and gives you more quote-unquote confirmation. This is further from market, but gives you the best risk-reward. If, for any reason, the range fails, so closes below it, let's say, right? Let's say it does something like this. Then that would be the first high time frame evidence of bearishness on that time frame, and your trade would be to trim whatever you've got, or at least my trade would be to get rid of whatever I've got, and then reposition it either on, you know, much cheaper weekly supports. This is a bit extreme. I think there's some daily structure closer to 100, not 100, like 60 or thereabouts. But the basic premise is, if the market breaks out down from the range low, you either wait for a reclaim of one of the boundaries to long it, or get it at a massive discount. So I think Solana bull market continuation until such a time as this cluster rolls over. But bear in mind, that's a real high time frame view, and that range low is itself 40% away, which sounds like a lot actually, but for altcoins it's fuck all, to be honest. Log plus weekly is a sin for any crypto. You are not very intelligent, and I'm gonna hide you before I lose brain cells. Oh, I feel better. I use Lightshot as my drawing tool. Lightshot. So yeah, Sol basically goes up, sideways, up, sideways, up, sideways. It moves like this. So until it stops moving like this, it's reasonable to expect the trend to stay intact. And the nearest test for that trend would be this consolidation between 170 and 140. And there's a bunch of daily brouhaha in the middle of it, but purely from a high time frame perspective, I think this is the kind of coin that's worth, you know, following with spot more than anything. So TLDR, as long as this is intact, it's a good coin. With the best opportunities being on the range high reclaim or the range low for max risk reward. Craig, sorry, did I misunderstand? Did you really sell BTC on support right here? No. No, this price right now is not where I was doing rebalancing and all sorts of other stuff. Whatever I needed to move around was when I tweeted that trend had broken, which was... Where was it? I think it was this move here. On this day. So no, it wasn't. It wasn't right here at market. As we pointed out, if anything, if there's any bounce to be had, this daily range low close to previous week's low is not the worst candidate for it, even though there's no real high time frame precedence for me, at least in that area. Okay. Avax. I mean, Luna didn't really go that far compared to the others, so that's not terribly interesting. Metaverse stuff just went up in a straight line. I don't have views on this. Let's look at derivatives, futures stuff really quickly. So a large reason many futures-based traders are conservative or kind of whatever, still waiting, is because we haven't had a big OI puke / flush for some time. And those are really obvious when they happen, right? Here. 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 They stand out on the chart, right? Like really obviously. And what you've had is basically since the 40k bottom, a significant build-up in open interest without a single type of flush event or whatever. Now again, the flush doesn't always need to be correlated with the market bottoming either. The clearest example actually being, this one here, the bottom we had at 40k. Here. If you look, this spike took out a shit ton of market participants. You got a bit of a bounce, but then ultimately the market traded below the liquidation point, if you will, right? Before getting accepted and then moving higher. So even the big flush candle isn't guarantee of a market bottom, but one of a really good trade to bear in mind is the post OI flush reclaim. So when you get a really big move like that, open interest disappears. The market tries to break down again and make a lower low. It doesn't work, and it reclaims the original low of the liquidation candle. That tends to be a pretty good trade, or at least something that structurally makes sense. But without going into, because the amount I talk about futures, open interest, derivatives, it's just boring for me, so I'm sure it's boring for you as well. The TLDR is that crypto trends very often nuke OI. And those OI nukes happen, A, frequently enough, and B, are somewhat correlated or generally happen, especially in a trend following scenario, at key market inflection points. Now again, that doesn't mean it has to be a bottom, right? Take the obvious top one for an example. Here, when this OI got nuked, that actually happened still at the market top and during the whole distribution before the nuke. So even if you're looking for a massive OI candle flush, there's almost always a mean reversion kind of bounce trade to be had from that, because as we know, liquidations are forced sellers. No one really wanted to sell down there, and there's always a kind of some sort of mean reversion baked into it. So there's definitely a bounce trade to be had when we get one of these candles, but it itself is not a guarantee or precursor for trend. Just like we had here, you can have a massive OI nuke, the market pushes up, and if that's still not enough to form a bottom, it can still take a shit. So, if you can get like a massive OI flush into here, and the market pushes up and still finds resistance, then boohoo, right? But the overarching point being, it's been a while. It's really been a while since we've had one of these boys. Now, does it have to happen on a move down like this and OI pukes? I think that would make sense, and it would be nice if it were to work that way. But it could also be that the market bottoms right fucking here, right? We get a market bottom, it pushes up to 80k, and then you get the nuke down and the OI flush ending up more at whatever. Let's say even these levels. So trading the mean reversion derived from the open interest flush isn't necessarily like price sensitive. It could be an amazing setup going from 56 down to 46 and then playing a bounce. And it could still be an amazing setup going from, 80 back to 60 and then bouncing. But in any case, we need one of these boys, right? And wherever it may prop up, either from higher to lower or from now to lower and bounce, there's definitely a bounce trade to be had when these crop up. Okay? Are BTC futures not settled in BTC contribute to the OI, or is it excluded from this data? So the top one is coin margin contracts, which are BTC margin. The second one is stablecoin margin contracts, which are stablecoin margined. So that's just something to bear in mind. Whether it happens now, happens later, wherever it happens, A, there's probably a mean reversion trade to be had. B, even if there is a mean reversion trade to be had, it doesn't mean you go up forever afterwards. Okay? In terms of altcoin derivative stuff from Livitas, altcoins are flat. They've been hammered on this move. So blaming it for blaming the market going down on everyone's long altcoins and they're frothy futures, yada yada. It's not as clear in this case because these rates are pretty reasonable, especially for Bybit as far as altcoins go. So for example, the reason I bring that up is when the market broke out to 52k on this move here, this was a completely reasonable and good-looking technical breakout. Just the issue was altcoin APRs spiked to like 300% and funding was like really high, and there was a lot of froth and really aggressive positioning in altcoins. And the argument everyone was waiting to make here, or on the run up, is that okay, fine, alts are jacked up, but what's going to happen is Bitcoin is going to keep pushing. That's going to liquidate the altcoin holders and reset funding and do open interest, etc., by virtue of Bitcoin going up. But what's happened over and over again is if Bitcoin breaks out, or even if it doesn't break out, but altcoins get too aggressive, it very rarely resolves by BTC going up and alts going down. It normally resolves by just the market going down. So the one-line summary on that is that really aggressive positioning in altcoins can stuff/negate a Bitcoin breakout. So that's something to bear in mind. But again, contextually, it's not the case at the moment because alts are kind of hammered, to be honest. This is very predatory price action. Yeah. Okay, that's really most of what I've got. Any quick questions or comments? I'll happily answer those, and then we can all get on with our weeks. Just make sure to jump back in the video, scroll back for the TLDR type of thing, the summaries for both Bitcoin and ETH. And bear in mind, because this is a weekly stream, I'm presenting you the safe confirmation boomer option based on weekly and daily structure. How can we see the OI charts? Go to Coinalyze and then go to futures data. Individual charts is how I do it. Pick, let's say, Binance, Perp, and then under indicators, you can pick a bunch of stuff. I just open aggregated open interest coin margined, aggregated open interest stablecoin margined. Okay? I'll drop the link in the live chat. Let me see if there are any final questions. How are you doing? Thanks, Ben. I'm all right. How about your new videos? One of the new videos for the Cred channel will come out this week. I need to decide which one to do. Either risk management or horizontal SR. I need to decide. But one of them is getting uploaded and finished this week. So you've got that to look forward to. Are you interested in metaverse coins at all? Not while the higher time frame Bitcoin and ETH stuff look like this. So I'm not really on the prowl for altcoin plays at the moment. What do you think of FTT? Exchange coins haven't really done super well, and in the SAM ecosystem, Sol has just been so much better than FTT. I still think like early bull market sets up really nicely for exchange coins to do well, and I'd still expect FTT to perform decently well in those circumstances. But yeah, it's certainly been disappointing / relatively weak on the run up. But again, there hasn't really been an exchange coin or even an FTX specific type of narrative, right? It's all been L1 wars, so you'd expect exchange coins not to do mega well, at least on a relative basis, and you can just see that by looking at Sol, Avax, etc. That's where the trade has been. I'm 24 years old. Do you ever skip trading and do something else like NFTs on Sol and ETH? Yeah, sure. I always make sure when something new comes up in crypto, be it farms or NFTs, mints, whatever, to just set aside some money to experiment with it, take a punt, take a gamble, so I'm up to date with the tech and where the mindshare is. I don't really care about options expiry. So yeah, I think that's good. I think we've covered a lot. Jump back to get the summary versions on the Boomer safety case. For those really interested in the short term, I just keep an eye on previous week's low and the daily close around this cluster consolidation thing here. Those are the two short-term trading levels that I think are relevant. As for the higher time frame stuff, as you know, Bitcoin above the weekly cluster at 61 would be really good. And for ETH, I mostly expect it to match or correlate with Bitcoin if it accelerates. So for its technicals, anything that drops below this macro breakout 4K thing just kind of starts to look shitty, right? So yeah. I'm not using Levitas as a paid service. I use the free stuff, and it's really good just to get me a overview dashboard type of thing. Have I missed anything important? I don't think so. I think we've made a pretty good boomer case for this cluster and market structure level. So yeah, like the video if you haven't already. Let's get to 300 as a nice round number. I'd be very grateful for that. Remember that this is the boomer conservative take. Maybe the market just bottoms and goes straight up and reclaims everything. That'd be super cool. But having the boomer option, the conservative one, at your fingertips is helpful as well. Bear in mind the OI flush trade that is still very interesting and hasn't formed yet. So that's something to keep on your radar via Coinalyze. We talked about correlations, ETH, higher time frame, altcoin stuff, lots of things. So that's it from me. Thank you to FTX for supporting Technical Roundup. That's the formerly Blockfolio /FTX app. So download it. You might have some discounts to buy shitcoins for your family soon. I've spent the last few months being outperformed by my own sister holding Solana. So I need to get my revenge and shill her some dog shit altcoins, so I can trade better than her or get better returns. But that's it. If something spicy happens, I'm sure Don will do a stream on Wednesday. And don't forget, Technical Roundup comes out tomorrow. trletter.com, also free. Go read that because it'll have the updated stuff from today's close and everything else. That's it from me. Thanks for putting up with my rambling. Remember, it's conservative, and just read the summaries because it comes with a bunch of caveats, as trading often does. Have an awesome week, and geckos to zero. Thanks, guys.